Okay, it is 2 minutes past 5, and I think we should get started. Good evening, everyone, and welcome to this important conversation on the 2021 South African budget. My name is Professor Uma Kollamparimbo. I'm the head of School of Economics and Finance at Wits University. It is my privilege to be hosting this event along with Business Day. Before we get started, I would like to take this opportunity to showcase very briefly my school, the School of Economics and Finance, for those who are less familiar. We are in our current identity as SEF just about 1 year old after we split from our previous school, which was the School of Economics and Business Sciences. So we are 50 academics strong with diverse areas of specialization broadly within the fields of economics and finance. We house about 1,800 students from first year economics all the way to master's and PhD in economics and finance. We have exciting new courses at the postgrad level. Apart from our economics and finance masters, we have now policy-oriented courses like the applied development economics, as well as very timely, I must say, a master's program in health economics. We're very proud of our students as well, who have shown their caliber by consistently coming out as finalists in the Nedbank and All Mutual budget speed competition over the years. This shows the caliber of our courses, of our academics, and we are confident that going forward, we will be further diversifying our course offerings in the near future. Our academics also contribute towards the policy space in the country, and especially in the last 1 year during the pandemic, we have been contributing through our policy papers for the government as well as civil society to understand better the response to this pandemic. This event marks the first of what I hope will be many more to come in terms of public conversations and engagements. And I'm delighted that quite by accident, today we have a panel, all women. And this, I think, is exceptional and important because transformation is our mandate, and diversifying the voices in the public domain is an important part of transformation. And giving voice to women in particular is the key part of this program. We are thrilled today to be partnering with Business Day in this important discussion. The Business Day journalists provide us with some of the best economic and business analysis in the country, and we hope for future collaborations as well. Thank you all for joining us tonight. I'm sure this conversation will be insightful and interesting. I will now hand over to Lukhanyo Myanda, the editor of Business Day, to moderate this evening's discussions. Over to you, Lukhanyo.
Uma, thank you very much, and thank you for that introduction. And also thank you for the opportunity for Business Day to collaborate with Wits School of Economics and Finance. I didn't go to Wits myself. I actually went to Grahamstown, Rhodes University. So, but I feel a bit of a closeness to Wits since we're like in the same town and we're around the corner. So over the years, I've gotten to know quite a lot of your academics and to collaborate with them on key issues on events like this, and also like op-eds on Business Day. So it's been quite a fruitful engagement for us. So thank you for this opportunity, and thanks for collaborating with us. So to start, I was actually thinking about the title, the title of our event, the budget, will it be enough to save South Africa? I thought about it after actually we decided on the event, and I thought to myself, I wondered if it's a good idea really to have a discussion that even tries to be predictive about the history. Because if you think 12 months ago, when we had the budget, we had no idea what was going to happen in 3 weeks, let alone like in a year or two. I mean, some of the issues are still the same in some ways: fiscal sustainability, Moody's. I mean, we had discussions about social policy. So we had a lot of the issues that really haven't changed, but the world has changed dramatically in the space of less than a year. So like maybe, I thought maybe we wouldn't be able to answer the question whether it would be enough to save SA, because I don't, maybe we don't know, but I thought maybe then we could tweak the question a little bit and ask, what kind of country do we want to see in 5 years' time or in 10 years' time?
Weapon. Go out, please. Just me, please go.
To see what kind of country we want to see in 5 years or 10 years' time, or what kind of society we want to see. And I think maybe the question, the answer is probably quite simple. I mean, we'd all want to see a society that's more prosperous, one that's more equitable, and obviously like recognizing how we do this in a very constrained conditions. So within these constraints, how do we get about it? How do we do what needs to be done, like while we're having to deal with a lot of these competing priorities and competing needs. And so that's what I thought the question I would actually put to the panelists in terms of the budget. Does it take us in the right direction, at least to get where we want to go? At least answer where we want to go, and then answer the question, does it at least take us in that direction? Because obviously we cannot know, we can't tell the future, so we can't know whether it will be enough to save the country or not. And I'd like to introduce my panel, which is a very distinguished panel. And from the business side of things, I've got Busi Mavuso, who's like the CEO of BLSA. I mean, those who read Business Day will be familiar with Busi's writing in a way that might give you a bit of a hint of what she's going to be talking about. And I think she and I will refer these discussions before about transformation, about policy, the reform, whether it's with ESCOM, whether it's with fiscal policy. I think she should be giving us the sort of the business view, what business saw in what Minister Mboweni had to say, and whether that takes us forward or not, or whether at least it takes us halfway where we need to go. And we've also got Lebo Mulaisi from COSATU. I think like a few months ago, we had one of these discussions where we concentrated on the basic income grant, which obviously was not something that was in the budget this time around. So, I mean, Lebo being from COSATU, obviously, it's quite clearly she'll be focusing on issues that impact on labor relations and equality of work and what it means for the country's workers into the future. And it's also my pleasure to introduce Fatima Bhoola from Wits. And I think her focus is probably going to be around about issues of the actual budget, debt, where our priorities with spending, investment versus consumption, investment versus debt. So I look forward to hearing your contribution to Fatima. And lastly, but not least, is my colleague Hilary Joffe, that I've known for many, many years, through Business Day. I think she's one of the first people I actually met when I first came to Business Day as a young journalist from Rhodes, maybe 25 years ago. So we should go a bit long back, and she's probably one of the most respected voices, commentators on the economy in South Africa. So it'll be interesting to see what she has to say in her 10 minutes. So she's almost as a journalist, she can have a bit more of a roundup, and she can tell us, I think she's got a bit of an open space. But without further ado, I'm going to allow Busi to speak first. And Busi, welcome and thank you. It's nice again to see you. I think last time I saw you, we were in a different country, with a lot of snow, and if we didn't know, within 2 months we would be locked up. Another one of those shows how eventful our lives have been the last year or so.
Absolutely. Thank you very much, Lucanio, for that introduction. And thank you for the invitation from Business Day and from the Wits School of Governance. It's definitely a pleasure for me to share my views, and the sentiment and the views of business in as far as the budget is concerned. So I think, firstly, the budget was a positive one, signaling some improvements in government finances, I think, which was good. And I think the minister in that regard really managed to do a great job. And I must say that I was very glad to not see a tax hike, because it is not a solution at the moment. I really think that if the minister would have went that way, it would not have augured well from an economic perspective. Because I think let's agree that the fiscal consolidation that is required and that is very elusive in the South African economy at the moment has never been achieved anywhere in the world through tax hikes, but rather through expenditure containment. And I think that is what government is going to have to be focusing on to try and ensure that we achieve the much elusive fiscal consolidation. So on a positive side, there were really surprising positives on the tax front in the form of the reduction in corporate taxes to 27%, the no increase in personal income taxes, especially against the backdrop of the fact that a lot of people have lost their jobs, due to the COVID crisis, against the backdrop of the fact that a lot of people have actually taken salary reductions. I think we all saw the Stats SA numbers that came out on Tuesday, talking about a 43% unemployment rate in terms of the expanded definition. So the increase in personal income taxes, therefore, would have been, or rather would have meant that you continue to overburden the continuously narrowing tax base. And I really think that the response from that would not have been a positive one. And I think the fact that government did not decide to impose any additional taxes to support economic recovery and the COVID-related expenses is definitely a positive one. I really think that the modest tax relief that has been provided to individuals and companies will definitely go far to support the economic recovery. The tax relief for individuals will definitely help from a consumer spending perspective, and from a company's perspective, it will definitely help in terms of leaving more capital in the hands of companies to invest. So it augurs well from an economic growth perspective, because when all is said and done, the biggest challenge that we're actually trying to solve for, as a country, is how do we actually get economic growth going, as a country. And that has remained elusive for quite some time in the South African context. And from a challenges perspective, the key challenge for the minister really, Lucanyo, for me, has been, or rather was to build credibility in government's finances. And I think the improved revenue collection means that government will be able to stabilize the concerns about fiscal sustainability, though it remains highly vulnerable, to any slippage in spending. And I think this, however, still does not address the key challenge facing the country of economic growth, as I've just alluded. And I think when all is said and done, this is the only way that government's fiscal position can be sustainably improved, as growth leads, to an increased tax base and an increased tax collection. And I think that is definitely what we would like to see. Few concerns from what came out yesterday. I worry that the budget relies on zero increases in civil servant wages over the medium-term expenditure framework. And I am concerned because I don't know to what extent it will be easy from a political perspective to actually achieve this. I really think that this is a highly contested terrain. I think we saw the response of COSATU, in as far, and I think the broader Labour constituency, to the 0% increases. And I'm interested actually to hear what Lebo has to say in this regard, Lucanyo, because, we are all facing a tough economic climate. The private sector is getting 0% increases. Private sector is not getting bonuses. So I think really it will be ludicrous, or rather it is ludicrous, for the labor unions to think that in this environment, when the jobs are being shared at the rate that they are being shared, government will still have money to actually give salary increases. It cannot be. But then anyway, I think we'll leave that discussion for later. And I think I'm looking forward to hearing the views from my COSATU colleague in as far as that is concerned. And from an infrastructure spending perspective, Lucanyo, I'm very worried that there was a decline in infrastructure spending in the budget, despite the promises by the minister to prioritize investment over consumption expenditure. So again, this is something that remains elusive. And I think this, for me, really emphasizes the case for government to start to meaningfully crowd in the private sector. I worry that the PPPs still remain the least used method of infrastructure delivery. Actually, there hasn't been a single PPP that has been registered with the PPP unit since 2017. So for all the talk and the lip service that government continues to give to PPPs, but I think this still remains elusive. And for me, it points to the ideology of government to think that central to the economic recovery agenda of South Africa has to be a government. And it cannot be, because we know that we don't have deep enough pockets as government to can do this. And therefore, the case for bringing in the private sector is really a strong one in terms of where we are at the moment. I really worry that the 3.3% real GDP growth in 2021 is definitely elusive. I don't see how we're going to achieve this with 43% unemployment in as far as the expanded definition. I worry that we are being too optimistic to think that we can achieve a budget surplus by 2025, especially when we're sitting with a tax shortfall, which is the largest that we've ever recorded, of 213 billion. I worry that the government debt stabilization at 89% by 2026 will be achieved. You know, the projected declining revenues as a percentage of GDP in the coming years is definitely not commensurate with the commitment of government to accelerate Operation Vulindlela. So I'm glad that government is speaking more about Operation Vulindlela, because I think it says that they now understand that central to our economic recovery is going to be policy reform and structural reform. And I think I welcome the confirmation of the March 2022 deadline to switch from analog television broadcast to digital. But I worry that without the crowding in of the private sector, without the leveraging of the skills and expertise that only exist in the private sector, you know, the Operation Vulindlela initiative is definitely going to be a failure. So if I were to probably maybe answer the question, Lucanio, as to whether was this enough, you know, to save South Africa. So fiscal consolidation is definitely still the goal from what we saw yesterday, and fiscal prudence still seems to be the target. And it was encouraging to see the rand strengthening in response to the budget. So it definitely says that the investors, foreign and local, and definitely the credit rating agencies are buying whatever that we're selling as South Africa. But the key, Lucanio, is going to be in how we implement. I think the posture that the market is going to take in response to this is a wait and see approach. We have promised many things as a country, but have failed to deliver most of those. So I think a wait and see approach, and I think we are yet going to be given another chance to see if we can be able to deliver on what we need to deliver. And if you were to ask me if we can deliver, you know, looking at the skills exodus that the public sector has actually experienced, I don't know if we'll be able to deliver. And with government's posture of not wanting to meaningfully crowd in the private sector, I worry that implementation and delivery is actually going to be achieved. Lucanio, thank you very much.
Busi, thank you very much for that contribution. Covered a lot of ground there. A lot of issues that have also concerned me, that's for sure as well. I mean, you know, for example, you speak about the growth numbers, whether they are realistic. And then, well, if those are not realistic, then it means the debt projections are not realistic. Then it means that the stabilization at 89, 90%, whatever, is not possible. And also another point I would make as well on the growth numbers. You know, let's say if they were accurate, 3.3% this year, and an average 1.9% in the next 2 years, 3 years. For me, that will still scare me actually, because when I think before COVID, if you remember, like throughout that whole decade, we were going at 1%, and we were saying this is not enough. We have an unemployment rate of like 28%, 29%, whatever it is, and now that is 32.5%. So I don't see how 1.9% is enough, especially when you read that like a country like India is looking at 11.5% this year, China like 8%. You know, we're not supposed to reach our 2019 GDP until 2023. The US will probably do it next year. So even if we actually achieve what has been aimed, to me, it still seems not good enough, big enough in terms of the social challenges that we face, which in a way then takes me to Lebo, actually. Then she can speak more about the social challenges. And I saw that you were in no mood to be diplomatic, so you've given a challenge. And now I will let Lebo answer from the COSATU perspective.
Thank you, Lucanio, and thank you for this invitation to the Wits School of Economic and Finance, as well as the Business Day, for putting up this very important webinar to discuss, I think, this very important issue. So Prof. Uma does a real good acknowledgement that it's women that are here to talk about the issues of budgeting. And isn't that the what it's like in the household? Women are the ones who are given the responsibility of budgeting, because that's when you know that, the money in the house is going to go for what it's needed to go towards. So it's quite significant that we're all here, women, and talking about issues pertaining to the budget. Maybe just to do a bit of a reflection of, when we last did this, and back then we were talking about the BIG, right? We were so optimistic because we had seen an introduction of the COVID grant going to adults, working age adults who are not receiving any sort of income, and it's quite funny that we then get into the first budget ever since all of that, and there's no mention of a BIG. There's no aspiration to even want to entertain the discussion of a BIG. So I thought that was actually quite key to note. So Busi, yeah, definitely not diplomatic at all, talking about the issue of the wage bill, acknowledging that it's a political hot potato. Nobody really wants to deal with it. It's hot for everybody. No one wants to deal with it, but we'll leave that to the bargaining councils. They're very well vested and well trained to deal with that. But it's also quite interesting to note that the finance minister talks about a budget deficit, not a budget deficit, but a shortfall in revenue collection, well above 200 billion rand, and then he goes and gives the private sector a drop in corporate tax to 27%. So I think the two are counterintuitive. So just like the business constituency probably doesn't understand our issues pertaining to the wage bill, we would think it's counterintuitive to say that you've got a shortfall in your revenue collection, and then those people that are contributing to your revenue collection, you decide that you're going to drop the level of corporate tax. So I mean, in our discussions in the last sitting of this nature, we were talking about, how corporate tax is going to play a significant role, how the wealth tax was going to play a significant role in achieving some of these social spending aspirations. But I guess we'll leave that one at that. Lukhanyo, I know you were interested in changing the topic for today's discussion, but I'm going to request that we keep it as it was. I prepared based on that. Will it be enough to save South Africa 2021 budget? I think that's really what piqued my interest, because when you think about 2021 budget, it's probably the most important budget to date, considering where we come from as a country. So safe to say, there was a lot of interest to see what's in the budget and how it plans to take us forward. So you probably need to take stock of the challenges of South Africa if you want to understand whether this budget was enough in order to take us, out of the current economic situation that we find ourselves in and into the future, like you were alluding to, Lukhanyo. So I would probably take stock of that, looking at the challenges that South Africa is currently facing, which are many, and there's just too many to choose from. But I'll be specific and focus on the 3 triple challenges. So was this budget enough to, take us out of the current quagmire that we have with the skyrocketing unemployment rates? Busi already touched to the expanded definition of unemployment sitting at almost 43%, the worsening levels of poverty, as well as the country being the most unequal in the world. Could we really say that this budget did that? And I mean, the answer is a resounding no. So I've decreased my expectations a little bit, taken it down a notch or two. The triple challenge is difficult to solve. There's legacy issues to consider there. So, the triple challenges are so big that no one administration has been successful in dealing with them. So why did we think one budget would deal with them? So I've adjusted my expectations down a notch. So I've looked at, okay, the economic recovery plan. Has the 2021 budget at least significantly spoken to that? Remember, this is the plan that's meant to take us off the economic challenges that we're currently facing as a result of the pandemic that we faced, and because of the position that we were in prior to the pandemic. I mean, I've looked at the budget. I don't even think that it went as far enough to even begin to quantify the amount of resource mobilization that's going to be needed to bring this economic recovery into effect. So the answer is, again, a resounding no. The the budget didn't do that. So lastly, you know, when your expectations are not met, you need to keep taking them down a notch or two. So I've gone down to the last level here, and I figured, you know, was it even consistent in its ability to provide social provision to South Africans, just like what we promised them in the context of the Constitution? Well, to an extent, we can say yes, there's a significant amount of money that's prioritized towards social provision. But when you look at the current fiscal policy trajectory of debt stabilization, what it does is it translates into the erosion of social provision in the long run. I know there was a bit of a debate in the actual speech around the definition of austerity, but if you look at the fact that the concept of debt stabilization, what it really means over the long run is that you roll back, you erode on social provision in the long run. And that kind of sounds like austerity to me. I know the minister may not agree, but I mean, if it quacks like austerity, that's exactly what it means. So by now you understand what I feel about Budget 2021. And it's not just me, but you know, the trade union movement in its entirety. So I've done a bit of just a comparison with some of the views that came from the public. And I think one of the most important ones come from Michael Sachs, the former head of National Treasury's Budget Office, who wrote an incredible article, and it was titled Essays, Budget and the Absence of Social Solidarity. So he begins his contribution by acknowledging that the vision that underpinned the first decade of the 21st century was centered around rising income from public servants, increasing public consumptions, transfers to the impoverished people, lowering taxation, rising assets prices, falling interest rate, and increased investments. So it's safe to say those days are long gone and dead in the water. What's really superseded all of that is a decade of austerity, again, whether the minister likes to admit to it or not. And really what it's done is eroded public value, which equally, it's eroded public value, but it's equally failed to stabilize the budget over time. So what we're trying to do with the budget stabilization process, we failed to do anyway, and at the same time, we continue to erode the public value. So, I mean, again, the conversation around, is this an austerity budget? Have we had a culture of austerity budgets? And I mean, I don't even have to give you empirical evidence like the minister said that we should. All you have to do is go to any public health facility and go and see one of the nurses. Austerity budgeting is written all over their faces. They're tired, they're exhausted. They're doing the job of 2 to 3 nurses because they're given reasons from their provinces that they're unable to fill critical or vacant vacancies really, because of budgetary reasons. So again, it looks to us like, again, it's a case of austerity budgeting. Now, I want to touch on the last issue here that I think made this article quite distinct. And this is the issue around the fact that we need to face the reality of South Africa's budgeting and fiscal framework. The rising debt, we will admit, is unsustainable. And the real consequence of it is that it will end up bankrupting the country. Equally, the erosion of social provision at some point will result in the country not being able to keep up with its constitutional imperatives. So we have a quagmire. So something needs to give. We can't keep butting heads about these two concepts. At some point, something will have to give. And I think this is what makes Michael Sachs's article quite important, really. He brings up this issue of us collectively as a nation entering into some sort of social solidarity. And what this means is that all actors in society have to collectively contribute towards the growth of the economy. So it's not just a case of cutting wages, Busi. That's one way of looking at it, and that's not collective at all. All players in society have to give in order for this economy to grow. So the business sector has to give, and that give will come in probably increasing corporate taxes. Communities have to give, not vandalizing public infrastructure. You know that the guy next door makes his money because he collects copper illegally from the railway line. We need to begin to call out such behavior. And it will have to give from the side of organized labor as well. That's the only way we sort out this quagmire, by collectively giving and entering into social solidarity. I think I'm going to leave it there. Thank you, Lukhanyo.
Lebo, thank you very much, and thank you for all those points. I mean, I was very interested in the last point you made, or the second last one, about this quagmire we have. Because I seem to find, like, I have these two conversations with people. There'll be somebody saying, we need to get this economy growing, we need to get more people to pay tax, and then they say, like, you know, because so many people are not paying tax, because then there's too much like burden on one side of society. But then obviously on the counter argument is quite an obvious one. There's a reason why South Africa is there, you know, like, you know, there's a reason why, like, we all know the history. We know why it's the most unequal society in the world. So we need to sort both these things out. So we need to sort the economy growing, getting an economy growing, and get the fiscal into like a sustainable manner through growth. But you also have to, as you said, deal about the whole issue of social solidarity. I mean, there is poverty out there. The irony is that we all agree. Nobody thinks people should be left to go hungry. But you know, but we never seem to have the same conversation. We seem to have two conversations. Usually one with each other, with ourselves, rather than with each other. So I think that's an interesting point that you raised, and I hope it probably will come up in questions again. And then also, like. And also, like, and also for me, you talk related to that about a need for people to talk to each other. For example, I like what you say. You know, maybe people in business do not understand the COSATU's view on wages, and then people on the labor front maybe they don't understand why business has to get a tax cut. But then, I mean, you can make good arguments for both. I mean, you can make good arguments, obviously, like for supporting the economy through tax cuts, or not taxing those that you see as the wealth creators. So all, I mean, and I don't think any of these are unnecessarily mutually exclusive, but sometimes I think the way we just somehow fail to find a common language to talk about them. You know, but it's interesting. Thank you for bringing it up, and I think this is like a very good point for, like, to actually bring Fatima in here, because as we of course, Fatima is going to be talking a lot about debt and spending, structure of spending. And I think, like, you know, that the minister, for example, like on this whole debate, for example, about austerity, like, I mean, like, the government will give you the numbers and say, like, our wage bill has gone up, I can't remember the percentage on the top of my head now, but then they will also say, for example, in terms of real GDP growth since 2008, something like 1.5% GDP, and then 4.5% wages or spending. So there's arguments, if you look at the numbers, that the structure of spending is not sustainable to getting this debt under control. And at some point we need to get that under control. Like in the end, if we don't have a sustainable economy, it's hard to see how we lift people out of poverty. I mean, it's easy to see how we get more people into poverty, but how we lift others out, so we become like a more prosperous and more equal society, rather than a society where we're all equally poor. So Fatima, like, I'd like you to take it from there, like from your perspective on the numbers, on the budget, and what we discussed.
Thank you, Lukhanyo, for the warm welcome, and thank you to the rest of the panel, and just to give me the opportunity to represent my School of Economics and Finance, and just to share some of my insights. So again, I think I'll start just with a general overview of some of the positives I did take out of the budget. So again, we know that in previous budget reviews and in previous budgets, disposable income, or taxing on disposable income, has been the largest way for the government to raise revenue. Obviously, in the current times we find ourselves, it was almost quite intuitive that they would keep those taxes largely unchanged. And so it was also quite heartening to see that there was tax breaks, in the sense that the entire tax brackets were rebased to allow to take care of that fiscal drag. Because remember, that budget, or at least that tax burden, does generally fall on lower income people, right? Or those in the lower income. So it is quite regressive. So I'm glad to see that we're not being punished because of inflation. and being pushed into those higher tax brackets. So that gave taxpayers some reprieve. Again, the government did raise some taxes through indirect taxes. So inadvertently, consumers are going to bear some of the burden through higher fuel levies. And given that we're going into an environment where the global or Brent crude oil prices are starting to increase, I suspect that we're going to see even further fuel hikes. So that means that while we've given lower income households some reprieve, the fact that our social grant payments were much lower than inflation, and the fact that there's going to be some sort of consumer tax is a bit of a worry. On the positive front, yeah, we're glad to see. So again, Lebo might not be very happy with what I'm going to say next, but the fact that the corporate tax rate has come down from 28 to 27% means that there is more funds available for businesses to use instead of it being, we've taken it away in terms of a tax burden. Again, that corporate tax rate is much higher than the global average of 23%. So I think that would then, Busi might not be very happy with knowing that. In terms of, and then I want to speak more in terms of, as Lukhanyo, you pointed out, the breakup or the breakdown, at least, of our expenditure line items. What as you rightly said, for the last few years, if we just take a snapshot, our compensation to employees, which is our wage bill, has actually come down between 2011 to 2020. And again, a lot of that had to do with the freezing of wage increases over the last 2 years. What does worry me is that the amount of government expenditure that is being allocated to capital payments has also come down. And remember, that means that we're not generating enough investment as government to pay off our own debt. And at the same time, then, our debt interest payments have steadily risen. If I'm looking at just again at the number, that in 2011, 2012, that value was 8.6% of the total expenditure, whereas in the 2020, 2021, it's now 12.3%. Similarly, as a percentage of our tax revenue, almost 20%, or at least 21% to be more specific, goes towards servicing our debt. So that for me is quite unsustainable. The other thing that I've noticed is that we can almost imagine a flat line in terms of core spending over the next 3 years. In fact, this is the first time our government has had to make really tough decisions about its core non-investment expenditure, and it's kept it quite flat. There hasn't been an increase. In fact, we might see that decreasing. Whereas we're seeing that the debt to GDP ratio is actually increasing. And so what that translates to is that a lot of the new debt we're going to be amassing before we then stabilize in the 2025-2026 budget period at 8.9%, over the next 3 years, we're still seeing a jump in our debt to GDP ratio. And all of that is going to be there to service in our interest payments. So in a nutshell, or just very simple terms, we are taking on more debt to finance existing debt. And that's where the worry of the unsustainability comes up. And the other concern is that the Treasury has made very optimistic outlooks for GDP growth. As you said, the 3.3% and then 1.9%. While I admit that it is on the back of a rather low base because we've shrunk so much, a lot of that is just catching up, almost to reverse the impact that the pandemic has had on the economy. And so I don't want to be pessimistic, but I do think that in the October medium-term budget policy statement, we'll probably see a downward revision in those growth rates. I just don't see us meeting those growth rates. And as you said much earlier, irrespective of the pandemic, even in years prior, we haven't really been able to get our growth rates higher than, for example, 0.2 in terms of annual growth rate in 2018, and in 2019, a lackluster 0.9. So there we were not faced with a pandemic. And now we have, in effect, the pandemic simply accelerated our existing debt, fiscal or a debt crisis. Remember, relative to other emerging economies, they would have probably just had a once-off shock in their deficit to see them through the pandemic, whereas with us, unfortunately, we've had a systemic rise in our deficit over time. And over the last few years, we've always had to finance that deficit through debt or borrowing. And so for us, it's more accumulation of an already high debt ratio. And again, while we don't have a specific threshold that we're trying to reach, as I said earlier, when it becomes unsustainable, when we're relying on much positive growth prospects, because positive growth prospects inadvertently means that we're also anticipating much higher tax revenue. And when that doesn't materialize, then our deficit might rise larger than the 40% that it is now, in which case our debt becomes a much larger cost to burden on our fiscus. Where I'm also concerned is that we tend to say that we need to prioritize structural reforms. Again, we're trying to do it during such a tight environment, an environment that does also require consolidation. So that trade-off will always exist. What we want to try and do is obviously bring down our reliance on debt. So if we can see some positives, again, this budget has been already tabled, but perhaps what we want to see in the future, and as you said, it's not just about what the budget can do now. We want this budget to lead to a society that does improve both our human and institutional capabilities, that does lead to self-reliance. And so if we can redirect our future budgets to reflect more in terms of capital formation, that in itself is growth enhancing. And what we'll see is that investment will then pay off for itself. Again, another point that I wanted to make is that if we can create an environment that inspires investment, we're going to get business confidence up, we're going to get investor confidence up. And again, this speaks to what Busi has said. This is the first budget, I would say personally, where I've seen some mention, some positive mention between that private-public interaction or collaboration. So if we can, and then again, I would say then that the devil is really in the detail. While the minister can present a budget and present or allocate spending towards infrastructure development, again, it becomes, the implementation is more complex. How that's going to translate to the actual projects makes me a bit worried. And so, again, we need all of these to be precisely in place for us to realize a plateauing of debt reliance or a debt to GDP ratio that is stabilized in the next 2 years. Again, in terms of whether we are going to see a primary or core budget surplus, I'm a bit skeptical on that as well. I don't see that happening. I don't see that a deficit so large being turned into a surplus in such a short period of time. I think it's going to take a much longer time period. But I mean, you have to you have to commend at least the minister for trying to consolidate the budget, because again, if budget consolidation didn't happen, we may have gotten into a debt crisis where we do default on our debt repayment, in which case we would then have to turn to non-financial or non-market for our borrowing, and that's the IMF. And then it's going to be a lot more condition driven. There's going to be a lot more criteria to whether we're going to be able to get those loans, because if our debt isn't reined in, our cost of borrowing rises, and it closes up any additional avenues for us to get further borrowing. And then I think we're going to have to take a hard look of whether we have, as a nation, made inroads in terms of the structural reforms, because as I said, those are the very conditions upon which the health of our economy is going to be judged. Okay, and I think I'm going to leave it there.
Fatima, thank you very much for that. And I mean, it's a very important discussion. I think the point you also raised about I think we have a bit of a theme here in terms of the outlook for GDP, whether it's too optimistic and what that means for debt. Because I think some people will argue that's how we got into this crisis in the first place. Because throughout the last decade or so, the Treasury would come up with over-optimistic GDP forecasts, and then it would borrow on the basis of that, and then you see, and you can see where that leads. So, so thank you for raising that up as a point of discussion. But hopefully people on the chat will also touch upon. And actually, just on that point, like before Hilary comes, I want just to inform our guests out there that they can put questions on the chat, and we will read them between us, and then they can either ask specific people or they can ask more general ones. Then if it's more general, then I will allocate to individuals. Otherwise, if they ask an individual, then I will pass it on. And on that note, maybe this is a good time to bring Hilary Joffe in to give the journalistic view of things. I think Hilary, there's been a lot of issues covered. I mean, Fatima has given us some very detailed issues on the sort of dilemmas on the debt issues, and we've also had the talk on the sort of social issues, and South Africans, whether we talk to each other or whether we talk at each other, business, labor. So Hilary, I would like to just get your take on all of this. It's a very open-ended, so you can either give us a little summary what you think, or you can just go on your own thing, and then from there we can take questions.
Thanks, Lucanio. The rose among the thorns. I'm actually very pleased to be on an all-women panel, but I'm not at all surprised, because women are taking over economics at the policy level and at the research level and and at many levels. We've had the new head of the World Trade Organization, the new head of the US Treasury, and certainly in South Africa, certainly in the private sector and the academic sector, and to a more limited extent, unfortunately, in the public sector, a lot of our leading economists are women. So it doesn't surprise me in the least that the panel is all women, and I'm glad to be part of it, and thank you, Wits. I also wanted to quibble with the question, because I really don't think that asking whether the budget will save South Africa is necessarily very useful, because we do have to keep in mind that the budget is not a thing. It's a product of policy decisions that are made by policymakers, by government. And in many ways, I think we look to the finance minister for too much. He doesn't make economic policy. He makes fiscal policy decisions, but he makes them in a context of a broader set of government decisions. So will this budget save South Africa? Well, yes, wrong question perhaps, but it's been a very, very interesting budget, that I certainly can say. Much more interesting than one might have expected, and especially much more interesting given that this is budget number 4 in little over a year. We had unusually 3 budgets this year. We had obviously last February's main budget, then we had a special supplementary June budget to try and capture the sort of catastrophe that was COVID and allocate some money. Then we had the usual October budget, and we've now back at main budget in February. What I want to talk about is I want to talk about signals, and then I want to talk about risks. And the signals I want to talk about in the context of two kinds of signals, actually three, because the one thing that people haven't mentioned is the vaccine. In a funny way, the most important signal in the budget was an expenditure item, which in the context of a 2 trillion rand budget is actually one of the smallest, which is the vaccine. 10 billion rand going potentially up to 20 billion rand close to for a vaccine, which is the most important thing that we can do to halt this pandemic and the human and economic cost that it is taking, and the government's, the finance minister's commitment that government will fund a mass vaccine rollout at least brings an end to all this nonsense about where's the money going to come from, which was always frankly complete nonsense, because any economist in this room will know that the fiscal multiplier on a vaccine is like massively positive. It's the one thing that you can do to support growth in the economy, support recovery. That was small signal number one. But the context of the other two signals I wanted to talk about is number one, why the private sector matters and why this had to be a budget that spoke to the private sector. And there are two parts of that, if you like, the real economy and the financial economy. Lebo mentioned Michael Sachs, who's an economist who I really respect very highly, but I think even Michael Sachs, coming from where he comes from, is saying that the only way ultimately out of this fiscal crisis is growth. And the only way we are going to get growth, and the way Michael puts it is this, is if the ANC makes some quite unpalatable decisions for the ANC to encourage the private sector to invest, because you're not going to get it from the public sector, which really is in fiscal crisis with the debt burden that is heading towards 5 trillion rand over the next 3 years, and consuming 20% of all the tax, 20% of all the tax that the government raises goes to pay the bondholders and the lenders, which seems a pretty unappealing way of using our tax money. So we need to encourage private sector investment in the real economy, but also to encourage it in the financial economy. And that means that we've got to talk to the markets. And this had to be a budget which appealed to the markets, because if it didn't, the markets punish us by raising our cost of debt and in the last instance, not lending to us. And as the finance minister put it, we are borrowing an awful lot of money from an awful lot of people. So we better keep those investors sweet. And that includes foreign investors, because South Africa is not saving enough even to cover the borrowing that government is doing, and we are dependent on foreign capital to come in for that. So, did this budget send the right signals to those people? And it actually did, perhaps surprisingly boldly. And it did it in sort of two respects. The first is that the finance minister opted largely to save, not spend. So the context is that compared to October, at any rate, government is doing less worse on tax collections, 100 billion rand less worse. So going into the budget, I think the big question was this going to go to higher spending, or was it going to go largely into cutting the deficit, sticking with a plan to stabilize the debt? And so signal number one that comes out of this budget is yes, the government has held the line. It has devoted most of that, let's not call it a windfall, but that less bad scenario, less bad economic and revenue scenario, to sticking with the plan, to staying on course to cut spending, and so stabilize the debt. That at least is the plan, because that's one important thing to note about budgets. They're actually proposals. They're not sort of real things. So how they work out in the real world can be very different, as we know. So signal number one, saving, not spending, and sticking to the plan, which is quite important after years of budgets chopping and changing. Signal number two, relying on spending cuts largely, not tax hikes, which previous speakers have mentioned. But this is an interesting budget because it was tax was really front and center, not only because we collected more tax than the disaster we'd expected in October, but also because the measures that were new were largely tax measures. That's already been mentioned. First of all, the finance minister had originally expected to stabilize the debt in part by 40 billion of extra tax increases. Those have been shelved. So it's not putting money back into the economy, but it's putting money back that would otherwise have been taken out. So that's an important signal to say, you keep the money, you grow, we're not going to take it away from you. And that includes a limited amount of fiscal relief for individuals. Then, of course, there is the corporate income tax cut, which is actually very interesting and quite a bold signal. It's at this point, because it only takes effect in a year or two's time, it's more of a signal to the private sector that South Africa is trying to make itself into a more competitive investment destination than it is a kind of a real tax measure for now. But that signal is very important because it starts to signal that South Africa is on its way to bringing the corporate tax rate down towards the OECD average, which I think has been previous, which is in the low 20s, where we are in the high 20s. And it does signal that government is serious about making the environment more attractive for the private sector. And best of all, it's supposedly not going to cost anything, because the plan, both with the plan is really fix SARS, don't rely on tax rate hikes, rely on better tax collection. And SARS is already seeing the fruits of better governance, better administration, a less corrupt approach to the world. And it's already really starting to turn around and improve compliance. And the plan for the corporate income tax cut is you broaden the base, you improve compliance, you signal competitiveness without actually losing anything on government revenue. Lukhanyo, just give me a signal, as it were, when it's time to start wrapping up. So those two signals were positives. But let me turn to the risks. The first, I think a few people have mentioned, growth. I don't actually think that 3.5% is what we would call economic growth for the current year, 2021. So the budget relies on 3.3% this year, and then just under 2% average the next 2 years. 3% after a year in which the economy has shrunk by 7% is hardly growth. It's just kind of bounce. Even that on the Treasury's own scenarios may not be achieved. And disturbingly, even in a best case scenario, we're not even going to 4% growth on the Treasury scenarios. In the worst case, we're going to 1.5%, which is really a catastrophe, and not that unlikely given government's incredibly slow pace, basically non-pace of the kinds of reforms that we need to get us out of this growth mess. So growth is a risk. The second risk is the political risks around implementation. Now, we've talked about the public sector wage freeze. The budget depends on, I think it's 285 billion rands worth of spending cuts over 3 years. Half of that comes from the public sector pay cut, which involves a wage freeze. Whether it's feasible to achieve that seems unlikely. But the other factor, which I think hasn't had enough attention, is the optics of this budget. I do wonder what the finance minister thought he was doing. What he's done is he's cut the corporate income tax rate, but he's also cut social grants in real inflation adjusted terms. And this is the first time that I remember that has happened. We know that social grants are one of the best ways of reaching the poorest people. They reach, I think it's 18 or 19 million South Africans. They have a huge impact in poor communities. I do think, now you could say, yes, all departmental budgets are going to be cut, let this one fall too, but I do think that the optics will make implementation of this budget politically even more contentious than it already was. Risk number 3, which should really not be underrated, brings me back to my very first comments about the need to keep markets happy, given how dependent we are on them to lend us a hell of a lot of money. Now, at the moment, the markets are pretty in our favor, unlike in March last year, at the height of the crisis, when money was just walking out of here at a huge rate, and the central bank had to intervene to try and keep the market even functioning. We still are very dependent at the kinds of levels of borrowing that this budget entails. They are better than they were, thanks to better than expected revenue collections. But, you know, a projected deficit of nearly 90% of GDP is huge. And the borrowing requirement of, I think it's 600 billion a year that goes with that, is huge. We need markets to be in our favor, which at this moment they are, because the world is kind of risk on and people are investing in emerging markets. But I do think that we remain very vulnerable, and if sentiment globally and locally were to turn, we would face the same kind of pressure on our budget, which I think would force tougher choices than the ones we are making currently. So let me leave it there, and I look forward to the questions, which I know in Wits panels are always really interesting.
Thank you very much, Hilary. I mean, you've raised some key points there, and I think obviously that the risks of implementation is quite high up on that one. So which then brings into the whole issue of credibility. And then interesting, yeah, that we didn't. Maybe we just got so tired of ratings agencies. I thought they would have been top of the discussion too, but they've hardly come up. Maybe it's one of those things that are so self-evident that people feel like they don't discuss so much. I think maybe that might be the issue with the vaccines as well. As you say, I mean, the multiplier of that is almost makes it like a non-debate. Like, who's going to debate whether? And we know what the cost of a lockdown is. And then if you have a vaccine that keeps more people healthy, and that means less people going to hospital, and that means more people doing economic activity. I mean, 20 billion vaccine, I pay 40 billion, I pay 100 billion. It doesn't seem like there's any price that actually you would think it's not worth paying as far as that one is concerned. And so I want to just thank all my panelists for all their different and very interesting contributions. And I think I've got a few questions. So I'm not gonna say anything myself. So maybe something we haven't discussed much. I'm going to take the first question is from Yasmin Meerholz. Yasmin asks, so when it comes to creating investment confidence and cutting government debt, was it not convenient that there was very little mention of SOE funding or bailouts? You know, based on your columns, Busi Mavuso, this is the title. This is like a subject that I know that you feel very strongly about. So I will actually let you give that one a go to start with. And then obviously anybody else can get in afterwards if they want to speak on the same.
Thank you very much, Lucanio. And I think, look, I think the only mention was that of the land bank, you know, with a 7 billion bailout or grant that they're actually going to give to it. But I think we all know, you know, that the bailouts of SOEs are actually going to continue. You know, I think a lot of it has already been priced in, you know, because there is no way that, you know, the SOEs in this country are not going to need bailouts. If you look at how dysfunctional they are, all 743 of them, by the way, you know, with Eskom leading the pack in as far as that is concerned. It is, however, interesting, I must say, the stance that government or national treasury in particular has taken in terms of giving government grants. You know, they are very, they've really tightened, you know, that policy, and they are really saying that we are happy to give government grants, you know, if this is against the backdrop of infrastructure spending, you know, or rather spending on productive assets. And I think this is definitely going to take us a long way, you know, in as far as ensuring that we can start dealing with the albatross that sits around our necks, you know, in terms of the SOE debt that we're currently facing as a country. But this, for me, you know, when you look at SOEs, it really, I think, begs the case against to what extent, do we need to continue with this ideology that we have from a government perspective of wanting to own all of these as SOEs 100%, and I think we really need to get to the discussion, Likhanyo, as whether we need all 743 of them, and I think I've raised the question over and over before, and when it comes to the debt that is actually skyrocketing, as Fatima has actually spoken to, as well as Hilary, you will see that this is debt that actually comes to actually bail out these SOEs. It was actually interesting for me that the IMF actually fired that warning shot just before the October medium-term budget speech to say that we are not going to be loaning South Africa money if the money is going to go towards public sector wage bill, and if it's going to go against, SOE bailouts. And I think that, the funders that we look to for funding are really going to have to continue to tighten those or put such conditionalities if they are going to give South Africa money. Otherwise, we are going to be in this self-perpetuating cycle, which is actually not going to take us anywhere. I worry that the issue of a fiscal crisis in this country is much more imminent than we actually think if we actually don't lift ourselves, out of this cycle that we find ourselves in. But also, I think, the SOE one is a very interesting one. So number one, debt for me doesn't only have to come in the form of loans, or cash injections don't only have to come in the form of debt. They can also come in the form of equity. There is absolutely no reason why that cannot be. But when you look at the fact that from a policy reform perspective, as Hilary has just outlined, there is so much that can be done if we were to accelerate the process. I mean, think about the issue we've been raising as business around lifting the license exemption for self-generation, which can actually really open up and really solve the crisis around energy crisis. I mean, if you speak to the private sector in this country, they will tell you that through self-generation, they can solve the energy crisis of this country within the next 18 months. And if you look at the fact that we are failing to move on this critical issue and the opportunity cost that the country has in as far as, an investment that is forgone because we are not in a position to can guarantee, energy security in this country. Those are the things that you look at and you really have to wonder, what are some of the conversations that are actually happening within government, and what is it, that is really a stumbling block and a constraint to actually try and open up, some of these easy wins, that we could actually be getting as a country. So the reason that the fact that the minister didn't mention it definitely doesn't mean that it's not going to happen. It's definitely going to happen, but I think he just wanted to really put his best foot forward, in as far as trying to get the positive signals from the budget. And I think, as we have all said, he definitely managed to do that. Thanks, Lukai.
Thank you very much, Busi. I think the issue, what you say about positive signals, I think Hilary also covered that quite substantial. I think we've all covered the same that topic or the importance of the signaling impact. Like, asking what could happen in the future, as Hilary pointed out, because this budget is not going to solve anything tomorrow. And the SOEs ones, of course, that could be a whole webinar on its own. I mean, we could have a whole webinar on SAA, and I'm sure we'll get lots of comments. So we don't necessarily have to spend, I think, any more than what you've covered there. Actually, there is a comment here on. I think it's more like a comment than a question from Neil Coleman, but I'll read it in full. But please feel free to respond. Maybe I'll ask you, Lebo, or Fatima, or both, because Fatima, you covered this whole this like a debt issue is quite substantially. So maybe you and Lebo can deal with this one. So Neil says the budget prioritizes debt reduction above all else. It does so almost exclusively through expenditure cuts. These are likely to reduce GDP and place upward pressure on the debt to GDP ratio. So it's almost like doing a reverse of what it actually wants to do. So while reducing the share of the debt, of the budget spent on debt service and costs is a valid objective, it says other avenues are available. And it thinks the only way to ensure debt reduction is through raising economic growth and well-targeted government-led stimulus. Like keyword, government-led stimulus is essential for that. So fiscal consolidation of the sort proposed in the budget is economic suicide, as the international experience, most famously of Greece, has conclusively shown. I thought this was an interesting question because there has been a bit of a consensus here that we need private sector, driven investment and to deal with the sort of the quagmire of growth and debt. So I would like first to deal with the issue whether or not there's too much focus on debt, Fatima, and or Lebo or both, and also then on the whether the fiscal consolidation is, like as Neil says, could be committing economic suicide here.
Maybe I'll just go first. And Lukhanyo, had you not read out Neil's comment, I would have read it out, because I think I agree 100% with the views that he shares in that comment. I think the budget is overly reliant on debt reduction above all else, as though it's like the single panacea that's going to solve all our budgeting crises. And we know that that's not the case. Neil already talks to the point that, we've all panelists here acknowledged that the only way to get us out of this is through economic growth. And if we can't have that growth, we will continue to struggle like we currently are as a country, and we'll continue to have these challenges with the budget as it is. So if we're trying to have a significant impact over and above the signals, if we're trying to have a significant impact on economic growth, this overemphasis on the reduction of the budget is definitely not the way to go about it. So I definitely agree with all of the points that Neil Coleman raised. I think another comment, that I thought was quite important, and I think Hilary, you made the important point that, for the first time in quite a long time, the grants that will be going out will have declined in real terms. And these go out to the poorest of the poor, and we are decreasing their purchasing power. And I don't think we grapple with how significant that is. When we look at the fuel levy increases that are about to be introduced, they're going to impact directly on the price of basic goods and services. So this means that the poor are going to have to spend more for food. So we've decreased their real income from the grants, and now we're also increasing the price of basic food items. I think we need to grapple with that. I understand that, signals need to go out to the international community, but what signals have gone out to the poorest of the poor in this country? What signals have gone out to the working class in this country? I think those are things that we need to grapple with. And I get that this budgeting process is actually quite complex, and analyzing it from these various different point of views is a complex process. But when we look at the fact that, it is the poor that are ultimately going to pay the price, albeit trying to look attractive to the rest of the world, which is also important. I think those are things that we really need to grapple with. And when I was looking at the question, Lukhanyo, that we're dealing with, however you look at the question, I just thought to myself, if you were just, a regular person sitting at home looking at the budget, what did you take out of it? What did it mean for you? Did it give you confidence? Did it give you confidence in this country? Did it give you confidence that, there is a way out of the quagmire that we face, in the current trajectory of the way in which our economy is moving? So I think that those are some of the things that we need to think about. But I definitely do agree with the views expressed by Neil. Thank you.
Fatima, do you want to add more to that? Or?
Yes, certainly. So again, I would also have to agree with Lebo Kang. Had we had the structural reforms in place, for instance, seriousness about energy stabilization, and that would require privatization of state-owned enterprises. Goes back to what Busi is saying. We are, as a government, we may be too fixated on holding on to these enterprises, whereas we should be open to the idea of some privatization of state-owned enterprises, again, to alleviate some of the pressure or burden on the fiscus. Similarly, as we said, we haven't completely weaned state-owned enterprises from their dependence or reliance on the government. And again, if we could then have renewable energy, bringing in independent power producers, things around making labor more stable, things around governance, those in itself could send the correct signals to those who extend credit to us. It would also then, as you said earlier, send the correct signals to rating agencies. So the collection, or if we show that we are trying to make progress on the very criteria needed to take us out of the quagmire that we're in, out of the situation that we're in, we're going to automatically then divert our budget towards capital formation, towards investment, stimulating investment. Economic growth will then materialize, and that then can be used towards settling our debt. So again, should we, and on the other extreme, we can say, well, perhaps the minister is pointing to a direction of short-term sacrifices to bring that budget deficit, to shrink that budget deficit, to bring that debt in control. Perhaps it will take then 2 or 3 years of more austerity, after which we then can shift the focus towards investment. I don't know, or perhaps we can do both. If trying to do both means that our debt is going to take much longer to be reduced.
Thank you very much, Fatima. I suppose, I suppose if you were the minister, or you could probably look at it and say, look at the last 10 years, look at the 12 years of like growing spending and growing deficits. I mean, that's hardly translated to growth. So they might argue like maybe like the idea that we need to spend more to boost the economy hasn't actually proven to be actually true, in a sense of what, just based on the most recent history, where the debt has gone this way and actually where our growth has actually stagnated or even fallen mostly. But one thing, when I was reading Neil's question, like one thing I emphasized was a sort of idea of a government-led stimulus, which of course is an interesting question, because in South Africa also we talk a lot about our state, lack of capacity in the state, or like at the same time we sort of expect the state to sort of drive stimulus. So which brings me to my next question actually, which is not from me, which is from Tefo Chabeti. So Tefo asks, how do we increase government capacity to make decisions and implement these programs effectively? Because at the end of the day, we can do, even if we agree, we need to have like a state-run stimulus. Do we have the state to actually do it? So I'll just leave that open to the whole panel. Like, I don't know if anybody wants to take that first.
Maybe let me go at it first. Luca, you know, when you're trying to answer the question of how we actually increase government capacity, you probably maybe have to look at that in the context of the fact that South Africa is not short of skill. There's no shortage of skills in this country. There is no shortage of knowledge. There is no shortage of expertise. There is no shortage of the correct diagnosis of our problems, and therefore there is no, and also it's true that there is no shortage of the know-how, or rather the crafting of the solutions that we actually need to implement to try and turn things around in this country. So the reason why things are not happening, you know, is precisely because we have an incapable state. And I think it goes back to the fact that government seems to think that central to fixing the problems of this country, you know, is going to be government. You know, they actually fail to recognize their own shortcomings in terms of bringing in the skills that currently reside in the private sector. You know, for instance, I mean, earlier on I alluded to the issue of self-generation, you know, for electricity, and the fact that we don't need to be sitting with energy crisis in this country. You know, you just need to actually meaningfully crowd in the private sector. Infrastructure, for instance, we have spent 70 billion less this year. We're going to be spending 15% less, you know, in terms of the projected numbers next year. And this is precisely because government thinks that they need to do all of this alone. They seem to forget that there isn't capacity in the state, not from a skills perspective and not from a fiscal perspective. And I'm not sure why there isn't the leveraging of the skills that already reside in the private sector, the leveraging of the balance sheets that actually reside in the private sector. So to all the lip service that they actually pay to meaningfully working with the private sector, we are yet to see government coming in meaningfully to actually look at how the private sector is actually brought in. I mean, if you look at the response that business came up with, in the form of Business for South Africa, led by our Deputy President of BUSA, Martin Kingston, you will know, that we already put together an economic recovery plan, of this country. We already articulated the key elements that this government is going to have to focus on to deal with some of the challenges. We already raised our hands as business to say that this is the contribution that we're actually going to give in terms of ensuring that we can deal with the economic recovery. But when you look at where we're sitting at the moment, you're sitting with a watered down version of the economic recovery and reconstruction program, which we haven't been started to implement. So there is this notion, it's less so now than it was before, but we come from a recent history of this government being anti-intellectual. So, when we are called the clever blacks, and unfortunately, this hasn't gotten us anyway, as a country. So and it's surprising, Lucanio, because I think, the president gave a lot of airtime to the fact that we don't have a capable state, and I think central to the problems that we have in this country is precisely because the reason why we're not moving on spectrum, for instance, which was promised in November 2020 and now March 2021, and I can tell you now it's not going to happen in March 2021, it's going to happen much later. There isn't a lot of, we just don't have the right people in government. And why government is actually not going to acknowledge that and actually bring those that can actually assist in as far as the implementation is concerned, really beats me. And we have to sit here and talk about the issues of an incapable state, which renders all of us as 59 million South Africans as incapable. And it's actually not the case, because there are a lot of people who are actually willing, ready, and able to can assist government to deliver. But it's just that this government is not ready to bring us in meaningfully. Thanks, Lukai.
Thanks for that, Busi. I mean, especially when it comes to the whole issues of, when we talk about infrastructure and as a big, great hope, it actually does make me wonder that there's a set of skills level. You spoke earlier about exodus from the public sector. I mean, even if it wasn't public sector driven, I mean, other people have spoken, for example, about the demise of our construction industry in this country, and it's sort of therefore an immigration that's caused upon all the best South African bridge engineers, they're all working in Dubai or whatever. So it almost feels like sometimes, even if we did have the money, and who was actually here to build these things, So I think that I hope people have listened and they take to heart what you say, because without the skills, in the end of the day, whether we're public or private, it's going to be people who are going to build these things, and whether or not we have the people, and whether we value the ones that we do have, and we keep them here. Obviously, we can also talk about the immigration laws, but that will take us another. So it's quite a key issue that covers a whole lot of ground. Actually, I think the next one I'll actually give to Hilary, because Hilary, I think it speaks to what you said about signaling and actual things, whether it's something, whether these things are practically done today or whether that's a signal for tomorrow. I think that this is a question actually about, it's from Blessing Pasoko. I'll just read it in full. It talks about the increase in the fuel levy and how this is going to impact on the standard of living. On the other hand, they also point out the minister has also given tax relief, which will result in more disposable income. So which of these two forces do you think will dominate? Has there really been any relief for private individuals given the price increases? So, I mean, are these really neutral, a case of giving in one end or taking with the other, or has there actually been relief here for South African people?
I've not actually done the numbers, and Blessing has not even mentioned the 8%, well above inflation increase in the excise taxes on alcohol and tobacco. So if you're a drinker or a smoker, you're paying more, assuming you're buying it in the legal economy rather than the illicit economy where nobody pays tax anyway. You are paying more for your alcohol or your tobacco. And as he says, you're paying more for fuel. Yeah. Look, and all of those are, they are very easy to collect taxes and they're very effective. And of course, they've got objectives which go beyond the mere collection of revenue. They mean to sort of encourage healthy habits in the case of tobacco and alcohol, but also in the case of fuel, I suppose in the end, it's sort of to encourage people or manufacturers to be more fuel efficient. I suspect net you may well find that I think it's only 2 billion that's been given back by way of relief from fiscal drag, inflation, and driving up your tax rate up. I imagine the higher other taxes more than offset that. Whether they more than offset the 40 billion, I don't know. But I think it's a question of which kind of taxes you want and what behaviors you want to incentivize. And I think broadly speaking, the decision not to go ahead with that 40 billion of tax hikes is twofold. The first is a recognition that actually in the last few years, government has raised tax rates, but collected less tax. So basically tax hikes have kind of run out of road when it comes to income taxes. Lifting individual and corporate income tax rates, it's been shown in the last few years, isn't going to collect more tax. You're going to do much better with better compliance, especially in an economy like this. So I think if you want more revenue, which the government has sought, it's a question of which taxes you go to, and the easy to collect ones which also incentivize supposedly other behaviors are the ones that's resorted to. So I'm not sure. I think it's an interesting question, but it's really in a way at the margins in any event, because as the other speakers have said, the burden of the stabilization of the debt in this budget really falls on the spending side primarily, not the tax side. And I mean, can I weigh in, Kanya, on an earlier sort of, you know, the reliance on debt reduction? You know, I mean, there's an interesting interaction between the budget and growth, and it's a subject of much debate among economists. You know, there's a couple of reasons why we need to stabilize the debt and why it has to be an absolute priority. The one is, as everyone's said, and we've all kind of agreed, you know, you don't want to be giving away a fifth of the tax that you raise to bankers and lenders and bondholders, money which you could have spent on better education or more social services or building roads. But the other is directly macroeconomic, because so much debt raised by government crowds out other investment in the economy. The government is eating up all the savings in the economy. Banks are buying government bonds rather than lend to people who might invest it in productive capacity, because this is the yield on government bonds is so high because the government is raising so much debt. So I think it's got a crowding out effect, and stabilizing the debt is really, really crucial for growth over time. And I think at the same time, as you said, Lukhanyo, yourself, there's unfortunately not much evidence that government-led stimulus has actually so far managed to lift economic growth. If quite possibly it has been negative because the government has in the process run up so much debt. So I do think that one can evaluate how this budget's been sliced and diced, but that cutting the debt is imperative. I think is very hard to argue again.
I think definitely it's very hard to argue that point. It's against it. I mean, maybe we can argue about the how and what the priorities should be and how to get there. But I don't think anybody can think we can keep going on like this. So, panelists, I haven't been a good chair in the sense of let us people a bit behind schedule. So what I'll do, I will just allow you each to have a closing remarks. But I know in a program we said everyone would have 5 minutes, but I don't think you really want 5 minutes. I think we've covered quite a lot of ground. So I'm going to leave. I mean, of course, you can take 5 minutes if you like, but you don't feel compelled to. So I will give you each just like a moment to have your last comments. Could be 1 minute, could be 5 minutes, but no more than 5 minutes. So should I start with you, Busi, since I did start with you at the beginning?
Absolutely. Thank you very much, Lucanio. So I really think that in closing, it's going to be very important for us as a country, Lucanio, to actually really focus on and give the necessary support to Operation Vulindlela. If we are serious about economic growth, unfortunately, there isn't any shortcuts to actually getting the economic growth that we need in this country. It is only going to be through the implementation of the structural reforms that we've been talking about, for the past few years. And as I've said earlier, it's very encouraging that government is now paying serious attention, to the issue of structural reforms. And I think there's more that is going to have to be done, also in terms of bringing in the private sector, to assist in terms of the implementation of those structural reforms. It's all good and well that we are actually looking at how we can actually assist from a short-term perspective, the grants and whatever other social welfare that we are actually doing as a country. But then as long as we realize that those are short-term interventions and they are not going to actually get us out of the economic quagmire that we're facing as a country. The only way that we get ourselves out of this quagmire, out of this problem, is through ensuring that we can actually look at the long term and see how we can actually achieve sustainable economic growth. And the only way to achieve sustainable economic growth is by growing the tax base. So I think really with all the conversations that we have had, the issue of sentiment is actually critical, because through positive sentiment, then you can actually get to increase business confidence. And once business confidence is high, then you can actually get the direct, the investment that you need, foreign and local. And once you get the investment, then economic growth will follow. And with economic growth, only then can we actually then deal with the jobs crisis that we're facing in this country. It's all good and well that government is really trying to put interventions in place to spend money, 12 billion rands to create 700,000 jobs and whatever the case is. But at some point, government is going to have to realize that it is not its job to create jobs. Its job is to create a conducive environment where the private sector can thrive, because if the private sector can thrive, then they can actually open up their balance sheets and invest in this country. And that is the only sustainable way to actually deal with the economic growth crisis in this country. So the proof of the pudding is going to be in the eating. And I really hope that we're going to see implementation that is actually going to come. But honestly, from where I'm sitting, I'm not holding my breath. Thanks, Lucan.
Thank you, Busi. As we'll stick with the same order, so Lebo, I will let you have your last word. So like I said, you can have a minute, you can have 5 minutes, it's up to you to tell me what you need.
Thank you, Lucanio. It'll even be less than a minute. I think there are alternatives, and alternatives is unfortunately something that we're not investing enough energy into looking at. We don't have to go through, this fiscal trajectory that looks at purely an austerity sort of trajectory moving forward. There are alternatives, and those include, pro-growth policies that provide, a life raft for the country, with fiscal policy providing higher funding for economic and social infrastructure investment and service delivery. We need to look at social policy and it being directed towards either part-time or full-time job creation, particularly for the unskilled, unemployed, and those who are currently lowering in poverty. This is important if you want to increase the tax base. And I think that will only have a favorable advantage for the budget and the revenue collection processes moving forward. We need a trade and industry policy which is centered around social contracts. We need to look at how we bring in that topic that we were talking about earlier, of how we enhance on this thing called social solidarity, because we do feel that we all have a part to play. I think if we view the current this current era that we're in as a government problem to fix, and we're waiting eagerly for government to give us the solutions, then we're not going to go anywhere. So we really need to invest time, looking at the alternatives. We need to look at investing our energy, in looking at how we contribute towards, this social compact of some sort, so that we take this country forward. There's a role for all of us to play. I think we acknowledge that part. It's just around how we coordinate ourselves properly in order to play that important role moving forward. There's a role for labor to play, business to play, communities to play, civil societies to play. We all have a role to play in this. If we're going to wait for government, we'll continue to have this conversation 10 years after today. I'm not too sure what it will be looking like, but we'll continue to have this conversation if we really don't put our hands on deck here. Thanks, Lukhanyo.
Lebo, thank you very much. And to that, I will move to Fatima to give us her last thoughts.
Yeah, I think I agree with all of the esteemed panelists who I've had the opportunity to share this stage with. And I think as a society, as a government, as policymakers, we need to think about much deeper transformative policies, measurable policies. For instance, as I said, that structural reform is not just some macroeconomic jargon. It has a number of specific criteria and conditions we want to meet. Some of the largest being stabilization or making our energy sector more reliable, creating an environment that is more stable for labor, taking away some of the regulatory burdens. As Busi said, whether that spectrum is going to be introduced now or later is something that government has always delayed with. So taking away some of the regulatory burdens. And then also giving support to more labor-intensive sectors. They actually struggle the most because of the COVID pandemic. And again, I don't want to take up too much time, but we know that the unemployment and the burden of unemployment and even the effects of unemployment was much more felt by the female workforce than anyone else. So we want to try and maybe, and again, this has been communicated as part of the government's economic reconstruction and plan to try and have more gender-specific policies. For example, prioritizing procurement from women-led enterprises. Those sectors of our economy remain the most vulnerable. And so if we can boost growth within those labor-intensive sectors, we then lift women out of poverty. So I think, and again, we can hold government accountable, because if we put into effect all of these measures, it's going to show up in GDP, it's going to show up in unemployment, and it's going to obviously show up in diversity of the products we put out as a country. These are things we can then hold government accountable for. And I think I'm going to leave you there. Thank you very much.
Thank you, Fatima. And then I will go to Hilary to have the last word.
I get the last word. Thanks, Luke. No, I really do think that the first prize is that we grow our way out of the state. That would absolutely be the first prize, and by far the most sustainable solution to the fiscal crisis. And South Africa has the opportunity to do that because our growth problem is self-inflicted. We have fallen behind other countries. We haven't been growing at not even 1% pre-crisis. Because other emerging markets were all kind of in the doldrums. It was completely self-inflicted because of our own sort of structural constraints, as they called. And that brings me in, including electricity and so on. And that brings me to the question which came up earlier about the capability of the state. And I do find myself sort of wondering, is that we have an incapable state? And you know, to some extent we do. And it is unfortunate that government doesn't draw much more on the skills that are out there. Or do we have an obstructionist state? And I think there's a big element of that, you know, government ministers and DGs and departments who basically obstruct the implementation of government policy, or certainly the policy as articulated by President Cyril Ramaphosa and others, to boost growth and private investment, who obstruct it because they are answerable to vested interests or for whatever reason. Not just because they're incompetent. Some of them aren't incompetent. They just are ideologically or for whatever vested interest reasons opposed. And electricity is one very good example, which came up earlier, which is all it needs to get 5,000 megawatts of private sector self-generated power onto the grid, which would be enough to close the gap in the next few years, which Eskom has identified, is a signature by the Mineral and Energy Minister on changing a regulation. That is all it needs. So you have to ask, why is it not happening? And you even have to ask, why do we need an Operation Vulindlela, welcome as it is, to unblock constraints, when in fact, many of these things are government policy, and the ministers in Cyril Ramaphosa's cabinet ought to be implementing it and instructing their DGs to implement it. So what I would love to see is the president surround himself with a core of people, ministers, DGs, and downwards, who are not only competent, but also buy into the agenda which he articulates. Because I do wonder if the reason we're not getting all these structural reforms is not because anyone's incompetent, but because some people are, the people around him are just answering to other interests, other ideologies. So that's really coming back to the point I made at the very beginning, that, the budget is a product of policy choices. And I think if President Ramaphosa's administration is to get implementation of the policies it has quite clearly articulated to lift the growth rate and boost investment and job creation, then he's got a human resources problem, which he should really tackle, and pretty urgently. Thanks.
Thank you for that, Hilary, and thanks to the rest of the panel. And I think people have noted that the fact that you were an all-woman panel. I feel quite honored to be allowed into the panel as so it was really a pleasure to be all with you tonight. And obviously, the answer will the budget be enough to save South Africa? We don't know, but we hope it is setting us in the right direction. And I think we sort of all know, at least we all know, and we all agree where we want to go. I mean, and of course, we might not always agree about how to get there. I mean, that is the whole point of living in a democratic society, is to have these debates and these discussions where all views are welcome and all views are open. And then hopefully along the way, we will have a consensus, and not just only a consensus, but then consensus that leads to actual actions, because at the end of the day, we can't be looking for consensus forever. And I'm not going to try and rehash everything we said again. I think we've covered quite a lot of the ground, and I know I had the same problem trying to summarize the budget yesterday. I mean, it's quite a thick document, and but I hope our viewers out there also enjoyed the discussion, and I want to thank them as well for their participation and their great questions and their great comments. And I apologize for the one or two that we couldn't get through. And I suppose, yeah, and then to thank Wits School of Economics and Finance for partnering with Business Day and facilitating this discussion. And I hope we will do more of this kind of thing. And yeah, all I've left for me to say, thank you very much and good night.
Thank
you very much.
Thank you,
Thanks,
everyone.
everyone.
It was a pleasure.
Thank you.
Thank you.
Bye.